Goodness. Okay. All right, everybody. What a day today. What a day. All right, guys. Everyone. Not sure how many people would be here, but there's something new that I'm thinking, okay, let me just come on here and chill for a while. And I thought, okay, let's just talk about current events or whatever, right? But yeah, let's see how many people gonna join in. Give me 1 minute. Got my hot tea here. Okay, let me take this out real quick. I'll be right back.
I do believe that it will not.
All right, guys. Oh, am I? Did I? I thought I had that on for everyone to look at. I guess I didn't have it on. Whatever. All right. So let's talk about a couple of things. Now, this, not that one. Hi, everyone. Thank you for joining. I don't know how many people are watching right now, but I feel, oh, actually, there's a shortcut here. Thinking, hold on a second, just in case something's happening over here. Ooh. I'm looking for.
Tesla is finished.
Okay, so quite a chaotic things happening all around the world, I feel. So Monday is gonna be crazy, right? And expecting some sort of chaos, sell off or whatever, right? Again, panicking. People are not seeing this coming, but again, like war breaks out before and nothing happens, but this one seems to be the big one, right? A lot of instigative type of language, talking among all the superpower out there who trying to, I hope there's some peace agreement, but it seems like everybody is just pushing everyone want to go to war. And it seems like, again, every cycle, right, they have to print money, and then this is seemingly the stuff that they do in order to, quote unquote, stimulate the economy, because there's none to stimulate more. And so that's going to shift the power dynamic, whether the US going to be coming down, and I don't know, we know that the US dollar is not going to be very, very reserve currency anymore. So again, there's been talk that Bitcoin could take a huge chunk of that wealth from that. But again, it could only be facilitated through digital currency. And I think that's why blockchain has been talked about. They've been preparing for this for quite some time, you guys. Like, it's in plain sight for sure. And it's just that every time cryptocurrency pops up, these figureheads, they tell you that it is a scam. And that's the narrative. It's been the narrative for forever, until they're ready to turn the switch on. Then everybody is like, oh yeah, of course. It's a great technology. It could do this, it could do that. The same exact narrative that people who've been building this type of technology has been telling, the world at large. And again, that's why I don't really understand why people don't look into the technology themselves and become familiar with it, rather than just believing in the narrative for the last 10 years. So now, even though they're, positioned to, or they're in the position to move the capital towards that type of technology, or companies that are involved in that type of technology, they're not necessarily going to do it, because they've been indoctrinated to say that it's no big deal. This technology is not going to do anything. It's just this and that, again, whatever speculation that they have, rather than just understanding it from the technology standpoint. Because again, my whole thing is that if the technology is useful, it's going to be used for whatever. It's a tool, yes, it's going to be used for good and evil, both of them, right? But understand that, if that's the direction in which they want the capital to flow into, there's no stopping it, okay? And so again, that's why they put Michael Saylor's front page news all the time, that certain company has to abide by it, or moving towards that, okay? So all right, let me take away the chat box here, since nobody's going to interact. It's okay. I'll check back at it in a moment, once in a while, just in case, right? Okay. So I was watching this particular video, and I've seen it before, the whole entirety of it. Now, I would like to kind of react to it a little bit here, because I feel like it's a bit misleading, but this is the next narrative in which they want to bash GameStop, right? And again, there's always going to be bad news or something negative to say about GameStop, even though they've been doing everything that they need to survive and thrive towards this massive amount of chaos. They've been giving so much crap of aggressively cutting down expenses to the bare bone, right? To the point where now they are profitable and setting themselves up for success, while every other companies out there at the moment in time are laying off people like crazy. Big tech, you've heard of Intel, you've heard of UPS, a couple months ago, and more. Even Google are laying off people like crazy. And so to say that that people are still stampeding to cut costs aggressively as much as possible, because now, it's almost like if you don't do it right now, it's too late for you already. When they should have been more nimble back then, more responsible back then, they don't want to do it because the money just flow to them. They want to please the investor. They want to please the people that are, holding the bag, so to speak, to be more bullish than they should. So now every stock, the big companies out there, that they are struggling to, to grow into the capitalization in which the company, or in which the market kind of valued them at, right? So again, markets, people who are betting up and down and all that stuff, right? They are the one who move the price up and down. And of course, based on how many people are actually betting up, betting down, the market maker is going to try to fleece them as much as they can by selling them calls, selling them put, thinking that they're gonna, make a gazillions of dollars, right? And once in a while they would let some people win, and so enticing them to come back. So of course that mentality helped driven the price up or down, depends on the direction. On the stock in which they own the most, obviously they're going to pump it to the max, and you've seen those happens all the time where Nvidia is pumped to the max, even though it makes no sense. Palantir is going to be pumped to the max because they own most of those, and they want to maximize and give all the maximum hype to those type of company that they own, so that their collateral goes up in value. And if they use those collateral to short GameStop, right, that's always the advantage in which these people have. Not I say these people, it's just again the way that the capital market structure in that sense, that they are allowed to do that, with unchecked power, it seems, right? Of course, with that type of system, there's always going to be that deception that you have to look in between the line and be patient enough for you to really reap the benefit. And so I really think that Ryan Cohen could navigate that pretty well in terms of like what works and what's not, right? Because if we are so, if leadership is not understanding that, they wouldn't be issuing convertible notes in the worst term possible for these people to come out of it if they want to, right? And again, this is like a preemptive, it's like a win-win situation for leadership and shareholder, people who are here for the long term, is that when you issue those bonds, you get enough money to be dangerous now, right? Because right now, cash is king, I feel like, right? And the cash that they have is built to prepare for this type of events here. And can you imagine if tomorrow everything just go down in price? Big companies out there drop by 20%. I mean, that would be a calamity, right? That will give a spring to people who have the money to buy at the dip. So, and on top of that, if the share price, GME stock, goes down in price faster, of course, we could also do the stock buyback as well. So that option is still there. However, I don't know, if we're gonna earmark a certain amount. We didn't do that yet, so might have to wait another year for that type of thing. But for now, we have $100 million worth of stock buyback in our arsenal, so to speak. but the whole point is that to, capture some of that value without, you know, crippling the share price to the point where you cannot recover that thing, right? But with the amount of shares that is being sold on the convertible note, it's, there's optionality in that sense where, only a certain amount of share would be released. They have the discretionary choice to either do a combination of shares or cash back. And so again, the companies still have the choice to pick and choose for the convertibility of those bonds. Now, with that though, the stock price would have to exceed the convertible rate, and it has to be traded up there for the 20 days straight. I really think he's trying to trap as many bear thesis people who are bearish on this company as much as possible to build up that in short interest again because of the nature of the market, right? And so perhaps every time it goes up to 30, he would keep issuing the notes so that the first convertible bonds would not be able to convert to shares. And so, and at the same time, keeping that floor raising to the point where, okay, if you don't close out your position right now, if you wait for the next quarter, guess what? We're going to have more money, even more money. So now what, right? And so the people that are trying to convert, thinking that they're going to have shares to convert, cannot convert because it doesn't exceed the first level of conversion. I mean, it's pretty diabolical, actually. If you really think about it, if he really actually doing that, to trap the people that are, not believing in the vision and the ability for this leadership to lead. And perhaps again, maybe he understood it to be like, you know what, this is a risk. I'm risking my capital, and I believe so much in myself that I could do this, turn this company around. It's going to be a challenging task for sure, but hey, I'm a billionaire and I don't need anyone validation except for myself. So to me, again, I think he's just proving everybody wrong and doing it in the most modest way possible. Which is again, pretty admirable in that sense. But anyway, so remember the converted price point is around this line right here. So let's just do red. Now, what I meant by, every time it goes up to that level, he would keep issuing convertible notes to the point where this would, yes, initial conversion or initial announcement that they're raising more convertible notes will cause havoc of the price for that immediate short term. We know that, and every time they do it, you could see right here. Okay. Now, again, the convertible rate is over here, and then the second one is somewhere down here. Okay, so perhaps he's trying to build that that triangle, that apex, right? A solid line of people who bearish would try to push the price down, Okay, if you push the price down, guess what? Retail's going to scoop up more. And more shares going to be trapped in the retail hands. And the only way for institution to get in on it is to agree to the worst term ever in convertible bonds history. You're not going to get paid, but if you want out, you have to agree to a 0% premium. And the only way for you to get shares, you have to convert it way up here, right? So in a sense, he's forcing these institutions to own GameStop above this level. Okay. Yes, I mean, he gave them plenty of time, right? Plenty of time for sure. And so with that convertible notes, right, it's going to solidify that too. But again, it could be a I would say institution that really want the long-term growth of this company due to the balance sheet that they've been having right now. And so one of the news press came is this right here. White Case Advises. So White Case, apparently it's a law firm that related to merger and acquisition. And they've been pretty famous for that, I guess. And everybody who's on the board here, contacts or whatever, are pretty well versed in merger acquisition. See, so again, something is happening right now. Something new will be revealed in due time, and whether it's going to be tomorrow or whatever, to try to get people more excited about owning the company again. But as far as the institution that bought those convertible notes, they already well positioned themselves. They are don't mind giving GameStop that amount of money at 0% rate to build, okay, to keep building more and more value into the shareholder here. I know it's slow, long, drawn out. People are getting tired of it, but again, guys, this is how you are going to build out your future here. Ryan Cohen is long-term based, long-term minded type of leadership here. So I trust him. I trust him with whatever decision he's making for this company to go to move forward, right? And I'm sure a lot of institutions right now at this moment in time are pivoting their stance on GME for sure. And for those institutions that does still not believing in the growth of the company, or whether they are so trapped that they have to double down on their stupidity, okay, double down, and then we'll see who's gonna win out, right? And so the short thesis is right now is very low. People who are trying to short this, they have to do it to maintain their standing, right? To maintain their collateral ratio or whatever, assuming, right? But for people who are long, if more institution coming in, do you think other institutions are not going to follow suit? Of course they will follow suit. And then that's when you see the S&P 500 talks coming in. I'm not sure it's going to be like immediately, so it might be another year or two in order for that to happen. But as far as like issuing more convertible notes every time we hit this level here, just to trap more more short who thinks that they could make a buck in a short period of time right now, without realizing, oh, we do have some plan moving forward here, right? So it's easy for people to assume that there is nothing new here. Don't worry about it. The company's not gonna go anywhere doing anything that is worthwhile. So they might keep you feeling that way. And with this chaotic world that we've been having right now, where people are protesting everywhere, it's easily people are easily distracted. So they're not gonna care about what GameStop is doing right now, even though for the future it's going to be a lot more beneficial. But in the short term, again, I'm telling you, with this war looming, really doesn't matter what the company has been doing. So if the panic sets in, right, everything's go. So Monday is gonna be an important day. I'm sure if things were to escalate even more, gas price going higher, crude oil on Friday it went up substantially, so people are put on notice, and I'm sure somebody knows what's going to happen, and they already well positioned themselves. But as far the company goes, right, there's two things here, because we have the cash in order to buy at the bottom, including our own stock, and other companies as well that will because of the panic, people will sell out, or at least would make to believe that they are selling out. Meanwhile, we have $9 billion to scoop everything up at the bottom. I mean, that's pretty good, huh? But anyway, so with the merger and acquisition too, perhaps the deal has already been reached. The companies that we are looking to acquire, merged into, acquisition into, already agreed to the terms already, and then they need the money to make that happen. And yeah, a lot of things is happening now. We see new posts of Buck the Bunny, and apparently we see a lot of more, enticing things that is like related to Roaring Kitty coming back, or waiting inside of something, right, or hanging there. So there's some reference here. Now, I really think these type of thing is just marketing, right, from the team. Using the cultural phenomenon that happened 4 years ago into GameStop as something, something to keep people more interested, and the fan base more excited about the company selling you stuff. Okay, perfectly fine, because this is what business is supposed to do, is to engage their customer, know their customer base, and know what they're gonna buy. And so that's how you, marketing towards those type of audience. And we know, they know that most of the audience are shareholders, and most of the audience are enamored by Roaring Kitty and all that stuff. So therefore, all of these posters that is referenced in this video here, I'm going to show in a minute. Just take it with a grain of salt. I know, been burned so many times, right, on predicting the direction of the of the company in the sense of like price action, right? And so that's what they want you to pay attention to. But at the same time, if you're here for a while, obviously long-term investing is always the best route to be, and not to worry too much about the day-to-day price action. But anyway, so let's take a look at it just in case no one has seen it before. So yeah, let's go.
Ooh, yeah. What? Holy sh**. What is in there? Why would you need two of those?
That's cool. Okay, there's a few people here. Hello, everyone. Stay happy. What's up? Awakened sheep. What is this? Okay. Cool. Thank you. All right. I hope you're caught up. Show your face. We might be. Might be. I don't know. You know. Airway. KCR. Hey, what's up? Haven't seen you in a while. I bought more shares when the price was low. Perfect. Yeah. I'm happy about that. Exciting time. Yeah, of course. Again, guys, like, you know, if you read the balance sheet and you're not bullish, I don't know what to do. I don't know what else to say. Do not know. Like, I cannot help you anymore. So make your own decision. If you think that's bearish, that's okay. Go ahead, you know, do your thing. You know what to do. But as far as I know, right, the assumption is that the leadership hasn't done anything, and even people who have been here, I watched Houston Wade, right? He was so frustrated at Ryan Cohen not doing anything and all that stuff. It's like, give me a break. Like, the guy has been working his ass off to turn this company around for the last 3 years to make the balance sheets strong enough for these, large institution now stampeding on these convertible notes at a 0% rate. Like, how can that be a bad thing? I know people think that, these institutions are just hedge funds and da-da-da-da and all that stuff. Remember what I said? Not every one of them are short GameStop. They probably didn't even have any position in GameStop. Most of them don't even have any position at all. In fact, they're probably looking to go long, but they just need the balance sheet to support that. Billions and billions of dollars of money pouring in, which it's happening right now. And people are still bearish on that, or, throw up an arm. So this is this is the bottom, because when retail is so fed up, usually this is the bottom. I'm telling you. So just gauge your sentiment. If you feel so beaten down because you've been in here for so long, time to buy, like KCR is doing right now. So when people are like, oh, it's never coming back down, that's when you begin to be careful. And again, fear and greed index, right? Every single stock, every single security has it. Okay. I'm just way so skewed to the upside to the point where I don't even want to sell at the moment, right? Yes, there are times when I'm like, you know what? I'm going to have to sell some because I don't have a good feeling on this, right? And so do that. If you feel that way, do that. It's okay. If you think that it's not going to go any further. But for me, obviously, there's always a portion that I do that with, and then a portion that I will never ever touch, because I don't know what's going to happen. I don't know when it's going to blow up, right? And so just give yourself, like, I guess, give yourself a narrative, or at least some sort of strategy. Like, have some plan going on, okay? Don't just be going to it blindly. Honestly, I really think that a good thing is happening, but like I said, I think there is also a strategy that Ryan Cohen is trying to play out too. Because, I mean, think about it. If the price run over 30 again, right, and it stayed there for next 20 days, what do you think happened? The first convertible notes would be converted, or they are allowed to convert it, right? What if Ryan Cohen wants to raise some more money? And then you just have them dig themselves bigger and bigger to the point where they cannot hold that anymore, right? Cannot hold their position anymore. Now, again, for that convertible note to happen, the stock would have to stay up here for 20 days, right? So people would have plenty of time to do whatever reposition themselves to do that with. And then when Ryan Cohen offer another convertible note, which I think it's going to happen, this is the playbook for sure. And they short it to oblivion again, so the next floor would be around here, right? Now the goal is to trap these people down here, right? So that when they issue another, $3 billion, the stock price would be down here, okay? So that the first convertible note holder cannot even, get the share then, right? They would have to wait until 7 more years to do that. And then people are going to be like, well, then we're going to have to wait until 7 more years. Okay. By that time, how much money can they raise from, convertible notes, do you think? And so that's going to, again, push more and more people, or I guess the float to go, the floor to go even higher and higher. And pretty soon it's like you can't stop the train. Because remember the compounded interest, the compounded cash flow that we have as a company, it's going to be $1 billion. Okay. What else can you say about the company being, a piece of shit, a piece of trash? Okay, a trash that is able to achieve $1 billion worth of free cash flow, positive. And so again, with like $3 billion worth of sale, right? And people will be baffled. People would still be, in the loop of Jimmy doesn't do anything. Ryan Cohen's going to dilute. He's just diluting his own shareholder base, and all that stuff. Makes no, whatever straw that they are grasping to try to make you feel bearish on this company when you should be bullish right now. Pretty good sentiment to at least, all right, it's all psychological, you guys, come on, it's everything. The same way with people who think it's gonna go to the moon tomorrow. Yeah, just be careful. I know I'm so bullish on this company, but also I have tamed myself to the expectation of, okay, now I know the game plan, that something is happening. They're merging. They are doing something behind closed door here that we don't see, and all we have to do is just tune in, right, to wait for the next news. I'm telling you this now. I feel like even if they are announcing merger and acquisition, initially the price is still gonna come down. You know why? Because then they're like, well, we don't know what this thing is gonna pan out. Like they're using billions of dollars to get into this venture. They're spending so much money on this venture. We don't know what's gonna pan out. Whatever narrative that they're looking into. But we already see now there's a narrative here about them not buying enough Bitcoin already. So I wouldn't put it past them to come up with some sort of, negative spin. And so, yeah, again, whether they're going to merge into something profitable or something that will need some times for it to, give us that growth that we wanted in the retail space. But with this, I feel like with this thing here, something to do with arcade, right? Some venture, perhaps blockchain based, type thing, type of deal. But again, based on the job description that I saw, career page, I don't see anything blockchain based at all at the moment. That I'm not saying it won't change in the future, but yeah, they are hinting pretty heavily that something is happening right now. So yeah, tune in. What else should I say? I'm so excited for now. But of course, like, people are looking into this video and find a whole bunch of clue, and I guess this says never closed. And then line forms here, like maybe this is the bottom, the bare bottom, because it's next to the dumpster. I don't know, I'm just like thinking about it myself here. And then they have a Pac-Man eating up everything here. So maybe Jimmy is about to eat every dip that the market's gonna offer. Or, I mean, you could say they're gonna buy Bitcoin or eat up the Bitcoin supply. Who knows, right? And then, of course, people see this reflection and they are postulating that it's a hang in there poster from Rowan Kitty in there. So that's a reference for sure. I mean, I could see it, yes, but again, that could be anything, right? Hang in there poster right there. Pretty cool. But if that's the case, maybe Rowan Kitty is going to join the board eventually. Sweet balls. Oh, what is it called? I have no idea. And then Love GME. That's pretty cool. I mean, again, if they're doing something with arcades, right? Like some sort of retail-based gamers type of, stuff. Getting people more excited on playing games and, going to places again. So just like how they were, saying they're back. There we go. And here's the Pac-Man thing. So eating up all the little coins, maybe. Bitcoin coming in. 3 buys. Who knows, right? I'm just like thinking, okay. $500 million each time they buy into Bitcoin. Which that's gonna add up to like $2 billion, right? So I don't know what you guys are thinking about this. I don't know if you guys seen it before. I've thought about it. Now when they said pull, right? People are pushing, so maybe they're saying, hey, you gotta think of it differently if you want to get access to this thing. So is it an NFT arcade? Yeah, that's what I thought along the line that too. But what are the things that I kind of noticed too, because I do have a Loopring smart wallet. They were discontinuing that end of this month. So perhaps there's something to do with that. I don't know. Again, this is way off speculation here. I mean, if they are getting into the NFT space, right, it wouldn't be far-fetched for them to accumulate Loopring, right? Because they need that network. And that network is pretty small. Nobody really noticed anything yet to build any tokenized anything on that particular exchange yet. But they are pretty big on NFT, right? Because we use them on our platform as well. So that'd be pretty cool if they are accumulating Loopring, because Loopring is pretty small. Nobody notices it. So let's say if they buy 20% of the supply, right? It's gonna be will do much better than Bitcoin, right? But again, total speculation here. Don't even go by that. So it's coming, you guys. I have no doubt that we are going to do something amazing in the next couple years, couple decades. Jimmy's would never go bankrupt. So if anything, now it's a matter of okay, how much money are they going to be able to make? So, and what type of angle are they going to go with, right? Whether they are going to be leaning heavily towards merger and acquisition now that they are becoming, a holding company heads on, full on holding company right now, which we are holding company. And so we are gearing up for that aggressive merger and acquisition type of deal here. And then we're just going to raise more money, hopefully, again, another $3 billion next quarter. I mean, that'd be crazy, right? And with this type of demand, you guys, like, this is not a big deal. No. Initially, they only wanted they thought they are going to only get 1.75 billion. Now people are advising them to raise it, to upside it to this, because the demand is so high. And so the next offering with the next set of balance sheets, right? Because I don't imagine them going like, we're gonna beat this. We are going to beat this for sure, right? I mean, just the interest payment and interest, accruing based on these $2 billion that is going to add to the pile too. And then plus the operational income coming in as well, because we're not burning cash anymore, right? Hopefully second quarter is gonna post a lot more money for these people. And of course, again, revenue we might not hit this or beat this revenue, but we're pretty close. Even the past one, it's only 2%. We're off by 2%, you guys. That's crazy, right? So eventually we're gonna be off by 1% here and there. So the capitulation mode is coming for sure. Every $3 billion, quarter 2, 3, 4. Next year we'll start. Yeah, we'll start with $20 billion. I mean, which people are baffled, right? And it's crazy to me that people are still bearish on this, right? Within this time frame, I know people are like, well, they're just diluting the share. That's all they're good at. They're just selling their own stock. Okay, well, duh. That's what publicly traded company do to get more cash for the future. But within this time frame alone, we are able to raise close to $5 billion, you guys. More than that, actually. 8 billion? Oh my gosh. Just thinking about that. $8 billion for a company that doesn't make money, for the company that people are telling you that it's not worth anything. Somebody's dumb enough to pay $8 billion for this. Okay. So are those dumbest people are retail? I don't think so. I don't think it's mostly retail. No. So and why are they so okay, with paying $29 per share on those convertible notes? Yeah. And the question is, who buy into those? People would love you to think it's the short hedge fund out there. Okay, even if the short hedge fund, right, that are able to access to those shares, that means two things for me. Okay. That means, that MOAS won't happen. Not necessarily. MOAS would still happen because now they are long. Right? And so there's no artificial selling pressure anymore because they want this stock to go up because now they're long. Now they have enough shares to make meaningful amount of money for whatever, right? And then of course retail would stand to benefit from that too. Depends on how many shares you've been accumulated already up until this point. Right? And then the other narrative is that what if it's a long hedge fund that had no position in GME, whether it's long or short? They just want to start a new position, in which case it's even more bullish, right? Because now you have the short, as this kind of alluded to. That's a hint, right? Whether short covered or not. That's what people are saying, right? Who knows? Right here. Did I show you? I don't know. Did I? Right here. So never close, right? That's a phrase that we kind of us postulating. And is that a hint that they are telling you that shorts never close, and these bond holders are actually long institution who want to start a new position in GameStop, right? And so again, that's even more bullish in my opinion. And so no matter what, I'm trying to say, what I'm trying to say here is no matter what, those two scenarios, whether it's true, both of them are true, a GME is going to go up in price, right? It's more beneficial. Anyway, guys, like they have the tools to beat the price down for the longest time. So they will have the tool to beat the price down still too. But again, they don't pigeonhole themselves into just one position. You guys, I'm sure they have a long position right now, and they're trying to positioning themselves to be more long than short. Okay, it's just that they've been so egregiously shorting this company for so long, they might need that same amount of time in order to reposition themselves to going long again. Okay. So while they're doing that, you're going to see this turmoil, and you're going to see all the negative coverage in the news because they can. And they're trying to draw out the draw you out to become so beaten down, so ready to sell, so so you're least likely to be holding on for the next leg up over here. Okay, the next mark up, exponential growth type thing here. And again, they will never let themselves go blown up, to the point where every single, financial institution would have to sell everything to buy into GME, if that's the case. So they're going to do it, control slow growth, a slow squeeze type of thing, right? Where they just let off the pressure for one and then drop it back down. But you have multiple opportunity, I'm sure, to add. But who knows? When is that going to happen? I mean, think about if you said 3 more. Hold on, let me see. If you say 1, when is the other one? 2, 3 more quarter. So March of next year, right? March of next year, maybe we're going to be able to add $12 billion more to the convertible notes. People are like, that's never going to happen. Of course, he's going to keep issuing the convertible notes. And each time, is actually giving you opportunity to buy at the dip. I'm telling you, like if you're smart enough, right? Every time you offer, wait till it dips. I mean, I wouldn't necessarily like sell at the top and then try to dip it back, buy at the dip. The reason being is that I'm so scared, right? What if I sell and then boom, right? Instead of bringing it up, they bring it, instead of beating it down in price, they just like, oh, I can't hold this anymore. And then boom, right? It goes the other direction. Just my luck. And so that's why I'm not going to touch any of those long-term, accumulation type thing of shares that I have. But there will be a portion in which, yes, okay, let me play, whether I'm wrong or not, right? If I'm right, yes, I get a few more shares here and there. But if I'm wrong, okay, I'm happy at that, at the price point in which I sold. And so with that, of course, like, people will say, well, why would you risk that type of capital? But again, if you don't, right, you might not have the opportunity to buy at the dip here. Lowering your cost average, right? There's so many ways, you guys, for you to whatever, do your strategy, whatever works for you, right? But if they're able to do this and get another 12 billions from the convertible note, and then push this every single one, so this one is like 2032, right? 2032. This one would be 34. Just keep pushing 2 more years, right? And then this one would be 2036. 36 and then 38. Keep pushing it. And then it's almost like a Ponzi thing, right? They call it. It's going to be talked like that, where, the media is going to, oh, it seems like they're engaging in a Ponzi scheme, right? Just keep, printing those shares to the market, saying, okay, if you don't want, if you keep selling like market maker, if the narrative of short selling, naked short exists, which I think it does, because I have no proof of that, then the company could just issue more shares. It's like, okay, if you have infinite shares that is out there, that is being sold to the public, why can't the company do the same? And meanwhile, we figure out that, okay, people are eating this up like candy, to the point where we could do, $8 billion worth of cash. Again, a mixture of share offering and convertible note. Now we find out that convertible note is more profitable, or it more, in line with our terms. Why not offer more? Right? So $12 billion more for the next 10 years to be able to for the next 10 years. Free cash, 0% term. Right? So maybe that's what they're alluding to here too, at the end. So push to start, pull to enter. I don't know. I'm just I'm just like try to get some brain juice going over here in my mind. It's like, okay, maybe this is like a sign for us to, okay, push to start, pull to enter. maybe will pulling the equity out of the company due to convertible note through convertible notes, which is gonna pull that shares out, right, and just create cash. Now, eventually, they're gonna stop doing this, right? But they know that retail's gonna keep on buying, right? Because we love the company so much. I wouldn't say that they, trying to take advantage of retail here. It's, again, just the market structure that we're living in right now that allows leadership to do this. And if you don't like that, then don't buy. Don't buy into Jimmy. I'm telling you, like, it's okay. I'm telling you, there's other opportunity out there. You don't have to buy it. I just so happen to be so bullish and know what leadership is trying to achieve here, that I think it's going to work, but it might take some time here. For people, again, doing this is going to force all the media types out there to cover GameStop as if it's a can you imagine if they come out with the headline and say, oh, Jimmy has $20 billion in cash? That's no big deal. Like, other company could achieve the same thing. Then layman people who've never been in the company before thought, wait a minute. You thought that this company was going to go out bankrupt a couple years ago. What's happening? Right? So it's almost like a in your face type of thing. It's like, okay, if you don't think that we're viable with $10 billion in cash with 0% interest rate, that is like payable to like 7, 8 years or even 10 years from now. Okay, let's play that game and then we'll see who wins out at the end. So with that compounded cash on hand that they are able to come up with, I don't think they cannot say anything bad without making themselves look like an idiot, right? So remember, we were the idiot, right? Because we were buying into the company for a long-term, prospect of this company, that we believe in the Ryan Cohen. We believe that the company's gonna succeed in the end, and yeah, we were right. Everyone was. Do you see the thing in the poster in the video? Yeah, of course. I saw it. It's a brief one. You have to be like zoom in.
I can't feel my tail.
See this? That's where people are zooming in. Right there. It's pretty clear. I think it's that poster. So again, there's hints here, right? And then this never close sign here. We are open, never close.
What? Holy what is?
But yeah, it's pretty fun. But yeah, again, the company is probably trying to do something new, and stay tuned for the update, right? 2 hours ago. Pretty new. I like it. And everybody is like looking at it and understand it to be it's cultural for sure. I'm telling you. Like, this is, again, could just be a clever marketing that the team is putting up, so they know their fan base pretty well. All right. So let's listen into this guy. I don't know if you guys have heard this guy before, but I'm gonna do a little speed up. He does talk pretty fast though, so let's go in. Yes, hint, a lot of hint. This is truly amazing. the whole history and future too, of course. But it's not gonna play out sooner than all of us think. I think it's gonna a bit drawn out until this conflict is going to be resolved. This Iran and Israel thing is pretty big, and people are not, I guess, are more complacent because they think this stuff happens all the time and nothing ever happens. So this might be the big one where knock on wood, hopefully, nobody's trying to attack anything major, major infrastructure here in the U.S. That would be terrifying, right? I mean, with the protester too, where people are I guess on the street. I'm sure you guys seen those protests, No King protests. That type of upheaval can cause a lot of chaos here as well in America if something were to happen, fall flags event and all that stuff. I know you've got. I don't know how well versed you guys are, but I'm just saying that could also affect the price of everything. If gas price goes up in value, right, which I think is going to happen because of the conflict and all that stuff, gas goes up $6, $7, or even $8 again. Everything else is going to be, inflated to the max still. And while we're not even close to that. So even if we have to pay for this war or pay for this calamity, again, they're trying to get the U.S. to get involved in that war because money printing, right? Those defense contractors are going to make so much money if that's going to happen. But yeah, just protect yourself. I'm sure you guys are well versed on that. But I'm just thinking that could be detrimental to the share price, even though we're so bullish right now. Doesn't mean that it's not. It's going to happen immediately. They might, try to draw out this and spike it down just because of the fear. Don't be so sure that it will never come down to 10 again, right? Because it could happen. It could just wick down so quickly and then right back up, right? So, but in the meantime, it's going to feel so bad. You're going to feel so bad. Doesn't matter how bullish you are, but you're going to be like, ooh, the world's going to end tomorrow. The same way with crypto, right? Same way with crypto. Same exact thing. Remember during COVID, right? You see Bitcoin go down to $3,000 at some point. Okay, $3,000. I know. That seems like long ago. But I'm telling you, back then, people were selling at $3,000. Because they thought, oh man, end of Bitcoin, right? The death of Bitcoin. Down here. Crazy, huh? Can you imagine? $3,000 just 6 years ago. You know what I remember seeing? I remember seeing 7,000. And I stupidly thought, oh, it's going to come back down. I was like, oh, I saw 7,000 right here. And I was like, oh, yeah, it's going to fall. So I waited, and kind of forget about Bitcoin over here. Forgot about it until it reached $18,000. Because that's when the news, Bitcoin reached $18,000 again. It's about to break. So that's when I bought in. Now, luckily, it broke, right? And that's when, I was able to capture some of that gain. Just some. Again, I'm not rich beyond belief, but at that time, I do make. I was in the market and I had some cash laying around and was able to make 5x at the time. And I knew Ethereum's going to do pretty well, so I went into Ethereum as well. So that's why I'm able to be here today, accumulating so many shares of GameStop. So thanks to that move, I was able to do that. But again, my point is, when panicking sets in, right? Doesn't matter how technically bullish this is. That institutions are buying, MicroStrategy is buying even now, right? More. And so just be ready for that wig. That's why having a dry powder, right, is so important. So the company has the dry powder for that. You don't even need to even, be scared. Like I said, if you own Bitcoin, right? If you own GME, you have a portion of Bitcoin already, so you don't even need to accumulate Bitcoin. So I did a new chart here. Okay, got it. So I did some calculation here, of course, based on the holdings, right? So currently we have 4,000, as if June 10th. So they might add more. So if they add more, we will have more per share. And this is based on the current outstanding, okay, not fully diluted at all, okay? Now, if the shares being diluted through this convertible notes holder, they want to convert, it's time for them to convert, right? Because the price go above the conversion rate. This will change. But as if for now, we're getting this many Satoshi or many Bitcoin per share. So there you go. So a small piece of Bitcoin is already built into the share that you have. So for example, if you have 1,000 shares that you own, right, you would have this many Bitcoin, which is 0.01. And that 0.01, if GameStop, no, if Bitcoin were to go to $1 million, right, I should do a Bitcoin price too. I think that would be fun to see. Bitcoin current price. And you could figure out, could really figure out how much you have in terms of dollar amount, right? So current price, say 100,000 right now, right? Then you could times that by that to see how much money you have. But yeah, that's later on. I'll do that later. But the whole idea is that you want to build up the Satoshi, how many Satoshi per share with this amount of shares you have, which is 1 million Satoshi, right? That's enough for you to retire in 10 years, 20 years, maybe 30 years. That's the whole idea of, but yeah, the more GME shares, right? And the more GME use that money to buy into Bitcoin, the more enticing this ratio is going to be as well. But on top of that, you still have the equity, right? The actual company, what they're doing, how many, other companies that they are buying underneath cash, all of that. It's going to be crazy. Like even this, it's going to change because now the book value is changing. And so that is a fun thing to even postulate, right? And so I already think that they're gonna be able to hit this amount right here within the next 2 quarters, fiscal year, right? So I think this is already happening, and then fundamentally we've been improving for quite some time. The next thing would be dividend. And then the next thing would be S&P 500. So whichever comes first, it's still going to be, I think, quite a bit of time. Okay, so let's listen to this gentleman here, and then I'll jump in whenever I can.
Bitcoin and Bitcoin Treasury Company analysis. Picture this: Gamestop, the corporate equivalent of a strip mall spirit Halloween, stumbling into Bitcoin like a hungover frat bro who crashes a black tie gala and calls it networking. They scrounged up $1.5 billion, thanks diamond-handed meme traders, then barely spent a third of it on actual Bitcoin. That is the fiscal bravery of a teenager loading $7 of unleaded into a stolen Dodge Neon before a police chase. Meanwhile, Strategy is guzzling whole tinker loads of sats, Metaplan and Smarter Web Company are nimble assassins, and GameStop is waving a Funko Pop from the caboose yelling, "Save me a seat, guys." Their customer base, the same people who bought Call of Duty on disc in 2025 and wonder why the TSA is confiscating their vape pens. Today, I'm going to show you slide by painful slide how GameStop transformed from a once-in-a-lifetime treasury opportunity into the fiscal equivalent of trading your last Bitcoin.
It's not what's next. It's where.
For a package of
Sorry. Sorry, Casper.
moldy government
Ads,
cheese.
ads.
By the end of this presentation, you will understand why conviction prints money and hesitation prints sad Reddit posts. All right, let's autopsy the comedy of error. GameStop raised $1.5 billion in 0% convertibles, then spent $513 million on 4,710 BTC. That is a 34% deployment ratio. In Quantland, we call that suboptimal capital efficiency. If they had put
So he's very good at, roasting, all the points, and I feel like I couldn't follow most of it, but I did hear him saying something about physical disc and all that stuff, right? That narrative is still, again, even with this guy who probably have some knowledge of what the company has been doing, but still, right? Perhaps he doesn't follow it as much anymore. Of course, we've been pivoting from physical disc, just gaming, in general, software, to now collectible. And so we heavily pivoted to that already. But again, that's always a pain point that we have to kind of go over people's mind, because again, that's been beaten to our psychology, or people's psychology, humanity at large who knows something about GameStop, right? That they are a dying physical company, brick and mortar, and nothing else. They're selling used game, all of that, right? Without knowing that they're at least pivoting heavily into something else already, and to the point where they're profitable now, first quarter. So I just want to kind of reiterate that, so people who's new to this might not understand or might not know.
pushed the full $1.5 billion into Bitcoin at the March average of 85K, they would be sitting on 17,600 BTC today. The missing 12,800
March average, like they just raised the money on April, So they probably May, that's what he's saying, but we just had the money April.
190 coins now represent a $1.4 billion opportunity cost at current spot, almost the face value of the notes themselves. Brilliant. The executive summary is simple: underdeployed capital, overpromised narrative, zero premium compression roadmap.
Overpromise what? We don't promise anything. We just, pull in the balance sheets and there you go. That's the result. So if people don't see the result and then be wowed by it, then okay, all right, that's on you.
And a dilution bomb ticking louder than the power supply on a refurbished Xbox 360. Welcome to the show. Let's zoom out from GameStop's amateur cosplay and remind ourselves why adult table CFOs now keep a Bitcoin tab open next to their Bloomberg terminal. The US dollar's M2 has ballooned 46% in 5 years. That's the monetary version of a Krispy Kreme hot light. Bitcoin, meanwhile, is hard capped at 21 million. It's the only assets where the board can't wake up, issue more units, and pretend they've discovered synergies. Quant takeaway, supply variance equals 0. That collapses long-run terminal inflation risk to a rounding error. There's treasury immunization for every 100 basis points of unexpected CPI, corporate cash loses roughly 9% of its real purchasing power over 10 years. It's actually way more than that, but you know government lies. Stick 10% of reserves in BTC and historically you slash that duration-weighted bleed by 2/3. It's portfolio immunization without begging the Fed for real rates above zero. Bitcoin's 10-year compound annual growth rate still clears 60%, with a post-halving sharp that humiliates the S&P faster than a McFlurry melts in July. You're buying a perpetual call option on global monetary recalibration for the price of 1/4 share buyback vanity project. GameStop sprinkled Bitcoin onto its balance sheet like a garnish on a cold Hot Pocket. It's the corporate treasury equivalent of licking a 9-volt battery and calling yourself an electrical engineer.
He has a good imagery for sure, you know. But again, like he's roasting it because in his standpoint, right? Like I could kind of see his point of view there. But again, because of the narrative that the money printing, right? The whole thing where, you know, M2 money supply and all that stuff, you could see that they are gearing up to print even more. And so when you have that amount of cash, it's going to burn so quickly. It's like a melting ice cube type thing. That's what from his perspective, that's what Michael Saylor is saying. And it's kind of true. I mean, if you're just sitting down with cash, right, your cash will be eroding and purchasing power quicker, right? So if you look at the DXY for the last, from January to now, which is half a year, in 6 months, let's see, how many percentage? 10%, 11% down in purchasing power of dollar. Okay, so with that purchasing power going lower at the rate of 11% in the last 6 months, that's what we're talking about. Now, this could, again, bounce. I'm not saying it won't bounce higher, but it's going to get worse before it's going to go the other direction, it seems. Okay, because they need the dollar to go lower. Who's they? I mean, people have been screaming, lower the rate, you know, trying to entice Jerome Powell to do that. And that's what Trump's won. And so you have to devalue the dollar in order to make things more affordable for people. I know there's a dichotomy there, right? If you have asset, right, then you're gonna do fine. A period in which dollar purchasing power go down, Bitcoin's gonna go up in price. Gold's gonna go up in price. Oil's gonna go up in price. So that's why it's important. But how is that going to be good for regular folks? I don't know. It's more like psychologically, because now mortgage is lower and people are able to, you know, stretch their debt even further. So they feel psychologically richer and more alleviating. But what they don't realize is that down the road they're gonna have to end up paying through high inflation, through higher asset price rising. Okay, so again, that's why debt-based system, right? You have to create debt. You have to constantly having to issue more debt in order to, you know, satisfy the older century-old debts here we're talking about. So yeah, that's why people are like, hey, you know, Bitcoin is outside of that system. So let's get some, you know, at least some, just to hedge against the stupidity of you know, government over here. But anyway, so you could see that TLT. See, I thought it was going to go the other direction here, but the value of the bond has never been lower. You know, it's been how many years? This is since 2003. You know, it was lower at that time. So the rate could still be bouncing off of around here. So people are gonna feel a lot more tight, and companies not gonna be able to hire anyone. Right? So you've seen a lot of layoffs already. I mean, think about that. So, and like I said before, with GMEs having this amount of cash right now, right? It's such an advantage for them, because not only that they will have money to buy into companies and operating in the best way possible, most efficient way, in terms of cash, pouring it into the economy, hiring more people. They're going to be able to snatch some of those, high-tech people who have been laid off and are eager to go back to work. I mean, it's a markets for sure that people will be, hate to say it, would be more inclined to accept the certain terms. And that's good for the company for sure, but it's not good for, I mean, if people agree to the terms of employment, right? Accept lower pay, that's good for shareholder companies, but it's also helped them temporarily transition into something else too. So my point is that, you get to get a pool of people who are eager to work for you at a very affordable price. Because now you have money to hire them, right? You are in a driver's seat, so to speak. Meanwhile, other companies that are, of course, they don't have to lay off those people, but again, the shareholder is not going to be happy with that. So because they're so big, they have to at least, not hiring that many people. But we will be able to. Anyway, you guys, let's go back to this guy.
The bottom line, Bitcoin is not a meme stock accessory, it's a balance sheet exoskeleton. Adopt it with conviction or get swept aside by the companies that do. All right, it's time to relive the slow motion car crash by Glorious Frame. March 2025, the big brain board meeting. Gentlemen, we're gonna be a Bitcoin company. Cue a unanimous vote, champagne pops, and the CFO sprinting to issue 1.5 billion of 0% convertibles because nothing says conviction like borrowing free fiat you plan to touch anyway. Capital capacity check, March average BTC price 85K, 1.5 divided by 85K equals 17,600 BTC. That haul would have leapfrogged MetaPlanet on day one. Remember, those missing 12,890 coins now equate to 1.4 billion of foregone asset convexity. Basically, the entire face value of the notes they issued. Chef's kiss. May 19th, 2025, reality shows up. Instead of 17,600 BTC, management waddles in and grabs 4,710 BTC for around $109,000 each coin, lighting $513 million on fire and leaving 66% of the raise to marinate in treasury bills. Translation, they paid 34 cents of every dollar to buy an asset that historically returned 60% CAGR and left the other 66 cents eating Jerome's new super hot 5%. That's ordering a Wagyu steak and eating the parsley garnish. If they had DCA'd the whole bag back in March, today they'd be up $700 million mark to market. Instead, they're bragging about strategic flexibility while they're
Well, that also could work against them too, right? If the market goes down in price. Of course, again, if Bitcoin goes up, great on the balance sheets. But remember, we are doing mark to market. So this 17,000 coins for that $1.5 billion that they are accounted for may not be $1.5 billion if Bitcoin crash below this, right? So that would be detrimental to their balance sheets temporarily, obviously. And so it's not always correct that it's going to go higher. But over time, obviously, if they're not selling in panic, if they just continue to add more at the bottom, right? So that would be crazy.
unused cash bleeds 8% inflation per year. Fantastic. The takeaway is that GameStop treated a once-in-a-generation treasury arbitrage like a clearance bin Funko Pop. Bought one, left the rest, and called it diversification. This is not capital allocation, folks. It's cosplay finance performed in the food court of monetary history. Welcome to the part where Wall Street and crypto Twitter fused into a single disgusted eyebrow. Announcement day, the stock dead cat bounced 12% on meme fumes. Within 5 trading sessions, it cratered 11% below the pre-news close. Net result, a 24% round-trip whiplash that left Robinhood traders feeling like they've been waterboarded by Mountain Dew. Implied vol ripped from 7.
I love his imagery. Like, it's funny. But anyway, so I'm gonna let you guys finish the rest of the video. Again, he's just like roasting, GameStop for not buying in Bitcoin at that time at a lower price than, like $80,000 range. So we all know now that they have bought somewhere between May 3rd and June 10th. So the highest, did I mark it? Right here, the highest is this price and the lowest would be this, like 93,000 or something within that time frame. Okay. So on average, right, somewhere in between there. So let's just say that they are the unluckiest person in the world and buy GameStop, buy Bitcoin at this price, which is $111,000. Okay, they're down right now. For now. By the time next quarter comes, we're gonna be up here somewhere. Again, based on this fractal or whatever. Who knows if it's gonna follow it that way. Excuse me. Okay, so let's move on to Michael Saylor. Again, since we have Bitcoin, right? We need to know a lot more about Bitcoin. Since this guy is the face of Bitcoin now, we have to follow him in a sense. But he have good points, right? So let's listen in.
You do the math, you'll actually see the Bitcoin treasury companies by themselves are buying the entire natural supply.
Yeah.
BlackRock and the ETFs are buying another measure of that. And we've got nation state actors coming into the space. So I think when Bitcoin rallies, if it surges to 500,000 or $1 million, then maybe we could talk about it crashing down by $200,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump media organization announcing
Right.
$2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher. I think we're in a digital gold rush, and you've got 10 years to acquire all your Bitcoin before there's no Bitcoin left for you. The competition is a virtuous competition. Metaplanet's the hottest company in Japan right now. They went from 10 million to $1 billion market cap to a $5 billion market cap. They're going to raise billions of dollars. They're going to pull the liquidity out of the Japanese market. So they'll be raising capital in Tokyo and the Tokyo Stock Exchange. Obviously, none of the rest of us are trading or selling equity in the Tokyo Stock Exchange. So it's not competitive. It's cooperative. There are companies coming public in Brazil right now, like Orange BTC, that'll come public in some time frame, and Melius. They're actually supporting equity capital markets in Brazil. The GameStops, they already had $6 billion of capital. And so for them to start to take some of that capital and funnel into Bitcoin, it's good for all of us. Nakamoto in 21, they'll bring their own particular twist. Our company is a very particular business model. It's to issue Bitcoin-backed credit instruments like Bitcoin-backed bonds and especially Bitcoin-backed preferred stocks. We're the only.
So this is a selling point for strategy. Okay, that's why people, when they say it's a Ponzi scheme, quasi Ponzi scheme, right? They don't really understand what what he's trying to achieve here. You know how when people are gold rushing to California way back in in time when the gold rush happens, right? People would move from the East Coast to now West Coast in order to be try their hands in gold mine, right? So the only people that got rich, who got rich, not the people who searching for gold, not at all, but the people that are selling shovel to get the gold. And so you could make the analogy that that's what MicroStrategy is trying to do, which is selling a shovel. Okay, the shovel is those convertible notes, those preferred share, those stride, those fixed income type of things. So that's the shovel that he's trying to sell to people. Why is it a shovel? Because it allows people to get into Bitcoin backed, thing. That's how I understand it to be, and that's why there's a value proposition here. Bondholders really could take advantage of the 10%. That's why I'm thinking like Ryan Cohen could get some of those, like 10%, interest rather than the Treasury bond. Yes, it is the most pristine collateral up until now. We are in trouble because nobody is actually buying bonds right now at the moment. We're actually printing money to buy our own debt back. So that's bad, right? I mean, come on. If, again, regular people don't really understand this, and that's why they don't understand that the inflation is not just 2%. That's the official number. It's hidden somewhere. It's hidden based on this pricing of your the bond that you hold. If you're older and you're ready to retire right now, it's detrimental to you because now your bond value is going to be a lot lower unless you have another 30 years have time on your side. This might not correct anytime soon, so it could still be around this value even though you hopefully why am I not able to draw this? The point is, hopefully you accumulate around here somewhere, right? And even if you accumulate around here, 20 years later, you are at the same valuation. You don't get to appreciate in the value, right? Yes, you got some, interest. Every year you get 5% back on this 20 years, right? So let's just say 5% a year, 20 years, you get double your money based on about double based on the interest, but then your principal will still stay the same. Okay. I hope that makes sense. But anyway, so with MicroStrategy here, he's going to explain that he's competing with those bond holders, treasury bond, actually. So until people understand that, they're not going to stampede into, MicroStrategy, Strife or whatever, his preferred stock.
Only company in the world that's ever been able to issue a preferred stock backed by Bitcoin. We've done 3 of them in the past 5 months. We're not competing against the Bitcoin treasury companies. We're competing.
Do you need documents notarized?
Sorry,
We can notarize
sorry,
documents for estate planning, deeds, contract.
If you're
against
watching.
ETFs like PFF that have portfolios of preferred stocks or corporate bond portfolios that are trading as ETFs in the public market. And the way we compete is we offer 400 basis points more yield on an instrument that is much more heavily collateralized and more transparent. And we're not going to saturate that market anytime soon. That's $100 trillion or more of capital in those markets. Our advantage is that we're 100% Bitcoin. So whenever we create a preferred stock, it has the Bitcoin performance, and it has a measure of Bitcoin performance and a fraction of Bitcoin volatility. That allows us to issue the most liquid preferred stocks in the world at the highest performance. Strike was up 29% when the rest of the market of preferreds was down 6%. Strife was up 22% when the rest of the market was down 4.6%. It's impossible to issue Bitcoin-backed convertible preferreds and Bitcoin-backed fixed preferreds unless you're willing to make 100% of your balance sheet Bitcoin. So I'm not really worried about competition from JP Morgan or Berkshire Hathaway. I would love for them to enter the Bitcoin space, buy up a bunch of Bitcoin. When they do it, they'll be paying $1 million of Bitcoin. The price will go to the moon. That will be good for the entire crypto economy and beneficial to everyone that holds any BTC-backed equity or credit-based instrument.
Michael Saylor also touched.
That's I think that's gonna happen. It's only a matter of time, right? Because again, like it's called a game theory, right? Like if one goes, the other's gonna go. But the domino's already been tapped. So the first one is already fallen, and more and more companies are following suit. Now, Trump media type thing, I guess they're trying to raise even more now, $12 billion to buy into Bitcoin. And so I think they're going to succeed in that. So do you really think that that's the reason? I mean, the reason why they're pivoting so hard right now into Bitcoin is because they also see the writing on the wall, right? They have some inside information as to, okay, what is happening. Perhaps, remember, Trump run on a platform where he was, we're gonna cut, not gonna spend, deficit spending, and then all of a sudden spending bill and going to $4 trillion more in 10 years time span. So it's just signaling to, me, at least, like being aware of it, that it cannot be done. You cannot cut anything without breaking the system, because the system needs that, creation of debt, and nothing stopped that train, it seems. That's why, Elon Musk also is kind of pissed, I guess, because he see the writing on the wall too. So is it going to happen immediately? I don't think so. But again, this is the time for you to start really thinking about dollar base, or at least storing your wealth in dollars term. Immediately, like I said, it's not going to cut your purchasing power in half, because if you just received that $9 billion today, you could wait another year to do something about it. But eventually you're going to have to do something about it. So I would say within the time, within the 2 or 3 year time span, you're good to go. Because if you're not burning cash and you make some money off of the operational income, more and more people are going to be shopping and spending money on the company, but then the company doesn't spend much on the expenses. So that's why, again, offsetting the burning rate. And so inflation doesn't seem that urgent to address at the moment. But I know that's why it's so complicated, right? And Bitcoin is standing to win pretty well. I mean, go up, because I think people now more than ever understand what Bitcoin is, and that gold and Bitcoin kind of follow suit when gold go up in price, typically when oh, look at this, it's going higher again. So when gold kind of doing that spike and then consolidating, so you have to wait for gold to consolidate, because people who buy gold right now is rushing it into it because of the uncertainty of what's happening right now, and that inflation is going to hit hyperinflation. So I think that's why the bond market is pricing in that too, where the rate cannot stay sustainably lower than what it is today. So the market is like, you know what, I need more interest in order for me to feel safe, to buy into bond market right now. So with this war, we might have to pay a steep price too by printing more. Yeah, and that's gonna add more fuel to the fire. That's gonna send gold to at least, 5,000. That'd be crazy, right? And then when gold kind of consolidate, that's when Bitcoin start to run. Yeah. It's pretty scary, time, but also exciting as well. I'm not liking what is happening with the, Iran and Israel right now, because I hate to see the destruction that is happening. I know people are, depends on what side you're on, you're cheering, and it's like, it's gut-wrenching. Just have to help pray for them for peace and no one gets hurt. But anyway, doom and gloom. All right, guys, I think pretty pooped out. Not sure what else I could say about this, but just real quick, Ripple has been increasing based on the interest of, RLUSD, that is real US dollar here, on the XRP ledger. Pretty encouraging to see that it used to be 70 million, but now it's 400 million. So it's creeping up, right? And the idea is that this is issued by Ripple, the company, privately owned. I'm sure they're gonna try to IPO at some point. I think they're just waiting on this stablecoin bill to pass through in the Congress, and we'll see how that goes. In the meantime, though, you see that XRP is gearing up for that price appreciation too, but again, consolidating, trying to fake people out. But I really think that, again, utility is kicking in. I'm still tracking this the supply burn, and it hasn't been burning that much, but yes, little by little it is being burned out. So far I've tracked it for this 6 months. They've been burning close to 1 million token through usage, right? The more transaction that happens in the ledger, remember, you need some XRP in order to create those wallet. Okay, so essentially, if every wallet, every bank needs to open those account with XRP, XRP wallet, you would need XRP wallet in order to transact on the XRP ledger. Remember, this token is built for the banks system. Okay, however many account that they need, they're gonna need XRP in order to transact on the network. I know they have their private ledger and all that stuff, but it all comes down to using the proficiency, the liquidity that the public already have on the token. And so, whatever market cap here is, right here, over 100 billion market cap right now is needed. But eventually, if you need to move trillions of dollars a minute, right, you might need more than, the current market cap to at least capture that volume that comes in. So globally, obviously, you have to figure out how many, again, assuming that everyone needs XRP, like, of course, there's other chain that it's going to be used for something else, but this one is going to be cross-border payment, and the whole world going to need that that instant amount of payment and all that stuff. So it's coming. I mean, I'm not saying it's going to go to the moon tomorrow, but over time, more and more people are trusting in the network, just like how people are trusting in, Bitcoin network, the same way. But this one, again, different mechanism of keeping track. It's a ledger-based system. So it has different consensus mechanism for this one, because right now it's all about low use of energy, right? So Bitcoin XRP is created in the response of the use of energy on Bitcoin per se. So just understand, like, different tokens gonna do different things. Bitcoin will still be here. I'm not saying it's a store of value for sure. It's already been in the psyche of humanity already. Moving forward, you will never get people to unlearn what Bitcoin is in perpetuity. So this one is going to be the next generation of this type of tech. So it's gonna be scary. It's gonna be scary because you could be tracked. Who knows? So that's the whole idea. Hopefully, you get some freedom to keep some of that. But depends. Hey, it depends on what's gonna happen. Is it gonna fall in the hand of good coders, good honest actors who actually want to free humanity, or somebody who want to control you? So it's either way. Right? It could fall in the hand of evil or good. So it's up to you to pick. All right. Sleep on that. It might be food for thoughts over here. If you could only invest in GME or XRP, which one would you choose? Dang, that's a tough question. Why can't I have both? What's wrong with that? That's a good question. I actually have both. But I only have one to pick? Gosh. Man, you're tough. I have to think really hard about this. I would go with XRP. Yeah. Sorry, GMER. Yes, I would go with XRP. I mean, short term, right? Short term GME for sure, but long term XRP. Yeah. Because short term again, like for GME, this imminent wave of just people who are not paying attention to the company, and all of a sudden you hear about oh company has how much money? Oh, they're actually making money right now? Like what? That shocking, realization that they're missing out on this, right? And then boom, right? People are gonna be like, oh yeah, I remember what happened. Stuff like that. So that's why I say it. How about you? I mean, let me throw that question back to you. while I'm waiting on your question, let's listen into this video.
touched on the intersection of AI and digital finance, delivering one of his more forward-thinking predictions. AI systems will not tolerate outdated, inefficient financial infrastructure. As they engage in millions of transactions per minute, they'll demand frictionless, secure, and programmable capital.
Powerball is trying to censor this video before more people
What the
discover the
heck?
loophole that has already helped.
Digital money
These
like
ads.
Bitcoin on Lightning Network or
Crazy,
emerging Layer 3 protocols.
The convertible bond market normally is a short duration investor. They want to hold the bond 3 or 4 years, and the calls that are embedded in the bonds are capped calls, capped at 130% of the strike, the conversion price. And so that's a short duration call investor and a short duration credit investor. What we sold with Strike, STRK, was a perpetual call option, good for 100 years or forever. And then we sold a perpetual dividend you could hold for 100 years and give to your grandkids. So long duration credit, long duration call, and that preferred never comes due for us. So we don't have liquidation risk, we don't have credit risk. So it's a much better instrument if you intend to invest in a volatile asset like Bitcoin and hold the investment forever. Now, the other point I'll
See, that's the key, is that it's not come due. So it's much better than the convertible notes per se, because then, if the convertible, if the price is under the convertible rate, then they have to give back that money. Okay. Excuse me. That, for example, for GME, right? We have $1 billion for the first convertible note issued. So if GME is trading below this by this time, by 30, okay, then we have to give them back 1.5 because the converting rate hasn't been reached. Okay. So out of our asset or whatever, you're gonna see the asset draw down by $1.5 billion. Okay, so what he's saying is that with the other instrument that he was issuing, Strike, you could just buy it just like TLT, the same exact thing. Not the same exact thing, but the same type of instruments, TLT. And you never have to pay the principal back because now the principal is built into the share price already. So for example, if you bought it at this price point right here, well, let me see if I could find it. Strife. There we go. Perfect. Okay. So right now, per share, per unit, you're going to get paid $10 per unit. Okay. So even if it's at $103 right now, if you were to pay it at this price, you're only going to get $10 from that particular share. Okay. Hold on, let me see if I could find a better. That's a 1 day. Okay. So it's going to fluctuate based on the risk appetite of people who thinks that, oh, this is too risky. I'm just going to, trade back and forth here. But the lower it gets, right? So if it hits $100, right? $100, you will get 10%. Anything below, even though the value of your bond goes down, if you buy it at this average cost price, then you will get more than 10% a year. Because for every share, you only paid, $93 for this one. But you get $10 from that. So $10, let me see here. Excuse me. So $10 divided by 93. So that's how you would calculate how many, So you would get a little bit more than 10% because you bought the bond so low. And that bond value would go up and down based on, the market betting up and down on the rates of, Bitcoin backed, this type of yield. And this is going to fluctuate based on the price of Bitcoin too, right? If Bitcoin were to crash down to $50, $50,000, right? This bond may fall below when it started, right? There you go. Okay. And so if it fall below where it started, yes, the value of your bond is gonna decrease. But if in long term, right, if you believe in the valuation of Bitcoin, then so long as you have more units of this, you are going to, create that constant income coming in. And MicroStrategy and strategy would not have to, pay the principal back because it's built into the share. People betting up and down, but they will pay, the rate, which is 10%. So 10% of whoever owned this. So they would only issue, amount of shares that is needed for them to buy more Bitcoin with it. So they will use that to increase Bitcoin per share of the regular, equity, and again, kind of calibrate it based on what they think. And so to them, 10% at a time for the amount of liability every year, it's worth it because they think that Bitcoin's going to go up in price 30% a year, right? That's an assumption, obviously. Some years it might not. Some years it might yield you 10x. Who knows, right? So that's the value proposition there.
I'll make, Katie, is if you think about what we're competing against, there's like $80 billion worth of corporate credit and preferred equity-based ETFs that we identified. Most of them charge a fee of 50 to 80 basis points a year. Most of them generate a yield of 6 or 7%. And most...
And this is also important too, because this is the market that these type of bond is competing with. Okay, the ETF that hold these basket of whatever, right, that claim to generate your income, get you fee, right? High fee, high whatever, right? So with strategy, you just get 10% and no fee involved in that, because it's act like a stock, right? Stock based type thing. So it gives them it gives the client or whoever, buy into this thing, that leg up too. Not only that you're going to get 10% in perpetuity, you will also not having to worry about the expenses, right? But there's some risk involved. Like I said, these are not fixed, right? The price will fluctuate, will, make you feel like, oh my gosh, my value is going down. But so long as you treat it as like a stock, right? And if you believe in the long-term growth of Bitcoin, you would buy it, consistently. Consistency is the key here to accumulate this and, again, grow that compound interest over time.
Most of them have very heterogeneous, opaque credit, low volatility, and very low liquidity. We're offering preferred instruments that have 8 to 10% dividend yields at par, 10 to 100x higher liquidity. They trade really, really hard, very, very liquid.
Right.
And they're homogeneous credit, and they're 6x over collateralized. So
That's
so
this is the aircraft carrier shelter. And it's better than junk bonds out there. Remember, junk bonds, they are so highly, like there are people who seek for those junk bonds. And they're actually in that category of junk bond, okay? But they're backed up with Bitcoin, like 6 times, like he said, 6 times over collateralized. And so it's much more safe if people are understanding that Bitcoin is not actually that volatile over the 10-year time span, and then that volatility is their friend. They would realize, oh, this junk bond doesn't even have any, like it backed up by the company that doesn't make any money. So think about that, right? Hi, Manuel, what's up? Okay, Ricky is falling asleep. I'm waiting for your answer, Ricky. But anyway, so with that junk bond, right? They are backed up by a company that doesn't make any money, losing money even. Not only that they don't make money, they lose money actively, but they are promising, a dividend of 10% because they need the money so desperately. So this type of instrument is going to be competing with those. And to me, like I would much rather holding, these instruments, which is Strife, right? Than the junk bond out there, right? Because at least I know, okay, the company has $61 billion worth of Bitcoin right now. Crazy, huh? So to backed up by this particular 10% a year type of deal here. Much better value, okay, for that. And can you imagine if everyone who bought into those corporate junk bond, right, realizing that now, then, those companies just going to go bankrupt, right? And they shouldn't be allowed to be traded in a public traded company anyway if they don't make any money. Of course, you have the world kind of turning upside down, but if they could compete with the capital from leaking into something useful, right? Why not just file for bankruptcy and then restructure it in some way? But again, like this type of company is really sucking the value out of useful companies out there that are actually generating income coming in. But at one point, GME didn't create income either. They were burning cash like crazy. But I'm saying, like, if they are continue to do that year on year and then able to go into the market and try to mislead people into, buying into a 10% dividend when they don't even have any cash themselves, right? Like Kohl's, for example. They still pay dividend even though they don't have cash. So it's really detrimental to the current shareholder. And so with this one, it competes with that. So I feel like it's a no-brainer at that point.
Bitcoin as a digital asset. What I'm saying is you go buy that and maybe you get 7% yield effectively and you pay the 50 basis points. And some of that is QDI eligible and some of that is taxable. When you buy one of our preferreds, like Stride is yielding like 11% plus right now, and Strife is yielding 9.5%. You buy that, it's all QDI eligible. It's trading 10 to 50 times more liquid on a dollar for dollar basis. It's very homogeneous credit, and you get an extra 400 basis points of yield, better tax treatment, etc. So we're actually competing against that. We're offering tax efficient, zero fee, fixed income yield to someone that wants to hold that in their portfolio. I'll make a point here. The typical person might do 10,000 transactions in their lifetime, maybe 100,000 if they're very busy. The AIs are going to do 100,000 transactions a minute. they're not going to suffer the existing credit systems and the existing banking systems of the 20th century. They're going to want to move digital money at high frequency at the speed of light. That means digital assets like Bitcoin over the Lightning Network or via layer 3 protocols. The demand for digital capital, which is what Bitcoin is, and digital networks like Lightning and like all of the crypto protocols that are being worked on right now, is going to go through the roof. So I think AI is really a demand driver for Bitcoin. It's going to accelerate the entire digital assets economy. And no, I'm not worried about the threat. The AIs can't crack, public-private key cryptography. What they can do is imitate you and talk you into doing something stupid if you're listening to them. And so they're a threat to all the other systems in the world, not to Bitcoin. I don't think he
Anyway. All right, guys. I know I played this video too long. But anyway, so yeah. Good things is happening. I'm going, close to 4 hours already? I don't know. I feel like I'm on here for a long time. Too long. Okay, guys, I will let you go. And yeah, thank you for joining.